what's going to happen to big tech after this. So just let's talk a little bit about what Dan Ives had to say. He said this could become a black swan event. You're playing with the third rail. He cut his Tesla target to 315 from 550. And he says that Nvidia numbers could come down 10 to 15%. What do you think about that, Adam? I mean, do you think that this is a black swan event for tech?
First of all, I'm jealous of Dan Ives' fashion game. As I wear the white shirt and the blue blazer and the red and blue tie, I know he would be doing something a little more interesting. Look, I don't know what Tesla is worth. I have no idea. I think it's impregnable to analysis. So I don't know if it's worth 300, 500, 1,000, or zero. It's been trading so disconnected from what I understand the core business is for so long that I more power to people who can price that. My view for a really long time had been for all the Mag 7, and we published this dozens of times, is you should be market weight the group. And the reason you should be is they're not particularly idiosyncratic. They're really well covered. You don't know anything about them that nobody else knows that's not in the price. Yet you can't replicate them. I can't find 30 stocks that trade just like Tesla, 3.3% position each, and I mirror its performance with less risk. Like, you can't do that. So just why let it hurt you or help you? And that had generally been my view of that cohort really for years. And until early February when the beta got high, the CapEx got high, and all that stuff. So when we went underweight. So broadly, that's been my generic view of the Mag 7. I think for Tesla, I really have no idea what it's worth, and I don't know how anyone can have confidence in saying its value. When I worked on the buy side, we were short the thing a ton on its way up. So maybe there's a little bit of bitter scar tissue from trying to value it and being wrong in the past. You know, when I worked at a big fund. So I don't see the Tesla. I don't have a differentiated view on Tesla. I think it's hard to value. The second one was about Apple, right? Is that what you said?
No, he was talking about Nvidia.
Nvidia. Oh, sorry. Nvidia, I do have a view a little bit. Now, I think you know I used to be a semiconductor analyst for a long time. And so kind of guilty as charged as always liking the semis a little bit more than everything else. But I kind of feel like if the CapEx is going to stay high from the hyperscalers, you're basically saying NVIDIA's revenue is good. And if I kind of mark to market where I am this year, you know, NVIDIA is down a ton, and I don't think they're going to miss their earnings in the short term. So I sort of think NVIDIA is better positioned than the other Mag 7 in the short term. And I'm a believer big time in the longer term, you know, kind of AI playbook, including in particular healthcare, where if you go to NVIDIA's website and scroll to the healthcare section, you'll get really enthusiastic about NVIDIA's role. I think Jensen knows more about healthcare than most healthcare companies. Jensen, the CEO of NVIDIA. So I would say I like it, particularly after this huge reset. But, you know, you can't have CapEx be reduced a ton from the hyperscalers and not get a big miss from NVIDIA. So there's that incongruity. But I think in the near term, its risk reward's better than a lot of the other Mag 7.
But that leads right into like what's going to happen with cloud and data centers. I mean, there's a double-edged sword here, right, for cloud. First is it's not just so semiconductors. I think are exempt from the tariffs, although there was a 25% tariff on semiconductors coming in.
Yeah,
but they are exempt. But it's not just the chip, right? Everything you need to build a data center is going to be more expensive. Yep. Number one. So your CapEx is going to go up even higher to build this stuff. And the second is, who's the users? Who are going to be the users of these cloud services? Is it going to be Nike, right? Because they have needs to buy software and cloud hosting. They have a very large digital presence. Yeah. If Nike's margins go down and Nike's business is hit by tariffs, then all of a sudden, are they going to do that optional AI program from Azure? Are they going to do that, new build out and move to cloud? Like all of that starts to slow.
Yeah, it's not, maybe it's non-essential CapEx now, but the way I'm thinking about that, Alex, is like, look, semis grew about 2% above GDP for 30 years. I think they're going to grow something like 5 to 7 to 8% above GDP. If you look at the last 2 years, say through the next 8. So there'll be a 10-year window. They're going to grow way more. And so they're going to gain share of the global spending pie because they do things that aren't easy to replicate in a big chunk of it. And, not all semis are the same, as you well know. There's industrial and auto semis and other things that are, maybe the average selling prices are low. But I don't think every company has to do their own build out to participate. Look, at Trivariate, we have an Nvidia chip. It's out on EQIX. We use it to search every earnings call transcript for certain words and tag stocks and do all the analysis we do. I have the Mercedes C-Class or whatever, the Metris. I don't have the Blackwell, but like it was still $10,000 for the chip, and it's massively efficient. So I think companies will find in a lot of cases that access to Nvidia products could really help them predict their employee behavior better, predict their customer behavior better, and maybe not have to do any net hiring. And so as your revenue grows 3, 4, 5% a year over a 5 to 10 year period, if you do that without any net hiring for a lot of companies, that's margin expansion. And we've seen, like, if I've learned one thing analyzing equities in the last 25 to 30 years, it's you do not short stocks where the margins are going up.
So do you think that they're going to try to just replace people with AI more than ever now?
Yeah, for sure. Absolutely. I think if you get better at predicting your employee behavior and your customer behavior, there's a lot of businesses that have lots of employees, low margins, and lots of revenue dollars, right? Think about the whole healthcare sector, right? McKesson, which has been a great stock, Cardinals, and Cora, a bunch of healthcare stuff that, but the whole healthcare services sector, hospital, like these companies are super inefficient where they can use technology and get much better, right? Like, have you been to a doctor lately? You look young and healthy, so you probably haven't, but like, what do? They hand you a clipboard and a pen and you like circle stuff. Just think about how stupid that is, like in terms of just like the ability to improve on their efficiency. So like I think you will see cyber, of course, nobody cuts that. But then after that, I think you're going to constantly think like, how can I replace employees with technology? How can I position myself to benefit from better analytics, et cetera, et cetera. So I'm bullish on the long-term kind of compute trade, and I'm bullish on semis. And Nvidia has still got the best product with the best company in this kind of positioning and in this area, and its stock's been reset a lot from the recent high.
Right, but I'm just going to ask it one more time. I mean, let's say you are a customer of these cloud companies. You have a big plan. You have a big AI implementation. By the way, we know 15% of AI proof of concepts make it out into production. 15% on a good day, right?
Yep.
You have a lot of experimental spend that's going with the cloud companies to try to figure out this AI thing. All of a sudden, every input that you have in your business goes up, maybe 25, maybe 40%. You are scrambling just to make the numbers work. Doesn't that AI spend, which is discretionary, if it's not 100% going to production, doesn't that get cut?
For sure. Look, the one thing that you know for sure is semis are a cyclical business. Okay, and so there's a combination that causes the cyclicality. One is you spend capex, you put the depreciation burden on your cost of goods sold, and then revenue slows and your margins get creamed, right? And we've seen that for 40 years. What you're saying is in a recession or kind of a growth pullback, will the revenue side be disappointing? Easily could be, and all I'm saying to you is like some of that has to be in the price given, the sort of I mean, it's just kind of open it up the terminal here, and Nvidia is down massively from the peak. So I guess we peaked at 149 on January 6th. We're at 94 last. So like that's kind of a garden variety semiconductor peak to trough stock correction already. If this gets really nefarious, could it go in half? Sure. So if I'm looking at this thing, I'm thinking, all right, maybe it has 15 to 20% downside and 80 to 100% upside and a 2 to 3 year view for the best company with like a genius CEO and a product area that grows above GDP. So like you definitely have to like it now more than you did 3 months ago.
Okay. All right. What about the ad-based companies? And we're going to get to Apple in a second. I guess we're building up to the big one. Here's Ben Thompson on Meta, Google, and Amazon. All the advertising-based businesses, Meta, Google, and Amazon, will also be negatively impacted. Lots of cheap products means lots of advertising, and lots of products on Amazon specifically, much of which could disappear.
Yeah, that makes sense to me. I mean, two things there. I mean, one is advertising is economically sensitive, and a GDP slowdown or a recession, if that's where we're headed, that business is going to slow. And then two, like Amazon, while it's a multifaceted company, and AWS has been an amazing business, they still are like Walmart size now in terms of total revenue. Like they sell a lot of products to the consumer. They're not immune from a consumer correction. So when Walmart guides the revenue down, I sort of have to assume pro rata or close to pro rata, that's going to slow down the consumer spend part of what they do. They're 2% of the U.S. GDP or whatever alone in terms of their revenue dollars. So they're not immune from that. So yeah, that makes sense to me. And I think, again, not to be the ebullient, stock American, buy low, kept growth, but to me, like maybe some of that's in the price because Amazon stock has also fallen off a cliff, right? So I'm not saying it's all in there, but and I want to get to how I'm thinking about that. But Amazon was at 242 on February 5th. It's at 163 now. It's down a third. Is that a year or two of earnings for the company? Yeah, kind of. Right now, I'm not saying it started at the perfect valuation where it was in January because you had a lot of optimism after the election and all that. But it's kind of down to the lows of where it was in 2024, and maybe that's reasonable based on what we know so far. Particularly if we're going to get less negative news on tariffs going forward, and we're going to start thinking more about taxes and regulation and those things being beneficial to companies and lower rates driving a more optimistic kind of view. So I think that's the debate, not whether, ad spending slows and consumer spending slows when the economy slows.
I mean, I just saw a tweet that Amazon is the cheapest it's been in the past decade. That's crazy.
Yeah, this has been a big correction. I mean, look, you have to believe the forward estimates, and I think right now nobody believes the forward estimates. I don't think this is a growth scare. I think that growth is actually slowing. So scare implies like you're wrong and you shouldn't be scared. Like things are slowing, and they're going to slow, and there's a soft patch for sure, if not something worse than that already based on what's happened. But so I think what reason that stock is down is because nobody believes Amazon's got 10% revenue growth in there for 2026. Nobody believes that. Right? People think there's a chance it's zero or whatever.
Or negative.
Yeah. Right. Or so I'm currently saying your 27 number, your 26 number is now your 27 number. Like you lost a year of growth. But it could be worse than that if we stay for, a few months doing this. And I think that would make the reset not cheap, but just sort of like average on 27 or 28 earnings. And that's the debate. And the answer is I don't know. Okay?
Right.
So I feel like if I was lucky enough to be shorting a bunch of these lower quality companies, it's tempting to cover some because you can get run over if you get some more positive commentary. On the flip side, I think there's certain consumer businesses that like there's already going to be a ton of damage. So like the kind of research we're doing is looking at like China products you can buy at Target and Walmart and Costco today, and then seeing what the price is going to be later this week, and see like how quickly, if at all, do the prices come up, right? Like there's ways you can try to get at this, but I guess what I'm convinced of, because of the fact that 19 of the last 20 times when the market did recover tech worked, because semis have sold off so much, and because they ultimately are growing faster relative to the economy than they did previously, that semis will work when it recovers. And you just have to ask yourself, like, do I buy, semi-cap equipment because it looks optically cheaper, or how do I play this?
Right.
That's a good debate.
All right, let's quickly talk about Apple, and then the market has just opened as we're talking, and it looks ugly, so we'll talk about the market more broadly. But first, Apple. All right, here is what Apple is dealing with on tariffs. So in India, this is from Mark Gurman at Bloomberg, where Apple is increasingly building iPhones and AirPods, there's a 26% tariff. Vietnam, the company now makes AirPods, Apple iPads, Apple Watches, and Macs, 46%. Malaysia, Apple's producing Macs, 24%. Thailand, the company is also making Macs, 37%. Ireland, which is within the EU, gets a 20% tariff. Apple produces some iMacs there. Indonesia, where Apple is going to start making AirTags and AirPods Max, 32% tariff. We also know China, where it has a lot of production. I think it's a total of like a 54% tariff. What is going to happen to Apple? Well, let's start there. What is going to happen to Apple?
Well, again, I think Apple is more impaired than some of the other business models are. I certainly think it's more impaired than Nvidia. With what I know now, the stock is also down, 260 to 170. So it's also kind of in that 1/3 correction. Look, Apple doesn't really grow its net income a ton. I think if you look back the last 10, 15 years, its net income dollars have grown less than or around 10% per annum. So it's almost barely been a growth company. It's value's gone up because they've converted from hardware to software and bought back a ton of stock and other stuff. So, I don't, it's really hard to have a differentiated view on a company like this versus consensus, but but I think they appear more impaired. I could see the logic that, look, like it all comes down to like your Apple Care, and you're going to keep your phone a little bit longer, so maybe it just delays the phone, replacement cycle a little bit, particularly because people weren't super excited about the Siri AI enhancements or other things that would have stimulated. I think you and I were on the air once where you were being somewhat critical of those enhancements originally, like a few months
I
ago.
remember that. I had gotten like the initial beta rollout, and it was like the first rollout of Apple Intelligence.
It was pretty bad.
And I was
remember
like,
you
this is
saying
not
that.
good.
I was like, that's an interesting point. Yeah. So I think, but I think it's going to hurt some of the peripheral business. Like, look, for people who aren't watching, like I'm holding up the dental, the
AirPods.
the dental floss size
It does
AirPods.
look like that.
It's kind of a bad product. Okay, I mean, so often when I'm talking to somebody, which basically means my head of sales or my wife, they can't hear me, right? Or they seem to be, so it's not a great product. They don't last very well. I think this is my 7th or 8th one. So
you always got to get the Apple Care on the AirPods.
I get it. I get the Apple Care, and I think that helps their business model. But like, I'm not sure. I'm not sure that the product. I'll get another one. I may switch to something else. So I think it's going to be bad for their growth rate, and and even if this stuff is removed or this is the peak of it, it gets worse. I could see this like clipping your long-term growth assumption a little bit for the company. Structurally.
Yeah, it's I think without a doubt, and they're going to have to raise prices. This is from Ben Thompson again.
It's expensive already too.
Yeah, it's a lot of money, and he says Apple will probably face little choice but to substantially raise prices. That has the direct problem of leading to fewer sales, even if iPhone demand is probably fairly inelastic, and the secondary problem of decreasing the market for Apple's service business, which is its primary source of growth. That is an ugly picture for Apple.
Yeah, look, they're my kids who are all in college all have like Apple laptops and Apple phones, and like I at work, like we obviously kind of go more in the Microsoft Keiretsu, but like you can buy like a decent Lenovo laptop for less than $1,000, and it's $3,000 for an Apple one. Like the price premium for their products is massive, and I'm not sure people are going to look around and say, I'm going to buy all these products at these prices, especially if they try to raise it. I think they will bump up. I don't think the inelasticity is that ubiquitous. I know for me, like with my own kids, when they are carrying their phones around, I'm like, if I told you were holding like $1,100 and $100 bills, would you be more careful, dropping that thing on the sidewalk? Like it's they're I think of them as like expensive computers they're carrying around.
Definitely.
Okay. And I think I'm in a better shape than the median American or whatever. I think it's a problem. I do. Mm-hmm. But you know what the problem with our logic right now is? We're frothing up on negativity, and the stock went from 160 to 260 from April to January. We could have said all the exact same thing. So I think this tariff thing is just bad for their growth rate, and it definitely is going to cause like a delay to any cycle improvement. They need another leg up in technology, and that's why I pointed out your prescient comment a few months back of like, it doesn't seem like there's anything enticing. Right. I already have 3 cameras on the back. Do I need 5? Like, I don't know. I don't know what's going to entice me to get a new one.
Yeah, so the S&P, the market just opened. The S&P 500 dropped off the bat. I think it was down 5%. It's now come back up a little bit to 2.8% down. Adam, like, is there a put here? Like, is there a place where we see the administration say enough?
What we wrote in our note to our clients is I'm watching carefully the Financial Conditions Index and the VIX. If you take these back to like the more intense points that we've seen in prior cycles, and you kind of loosely say, how much are we down so far? If it gets back to those more severe points, how much more can we go down? This was before today's price action. It seemed like 6 to 7% more lower. So if we're kind of halfway there already, I think every investor is looking around saying, all right, I got 3%, 4% downside, but maybe now I'm back to 20, 25% upside. And so all of a sudden,
people are going to come back in?
Yeah, I think we're close to people kind of wanting to make a trade. I've been hesitant to. look, there's nothing better than being a contrarian bull and being right. I mean, that's the nirvana. The problem is we've seen no behavior where companies that guide down act well, and we're heading into an earnings season with maximum CEO uncertainty. So if you and I are running the company, you were the CEO or CFO, we would be doing our pregame about what we're going to say. No way are we letting each other guide, anything but very conservatively for July numbers.
Yeah, I mean, it's going to be ugly. I just saw a tweet from Joe Weisenthal at Bloomberg. This is now the worst 3-day performance for the S&P 500 since. Any guesses?
87.
October 1987.
Yeah.
Nailed it.
Yeah.
I mean, holy crap.
Yeah. No, but because you had one huge day that was really bad there. But I think we had like the limit issues there. But yeah, I think that's because the starting valuations were kind of high and there's maximum uncertainty, and it's back to your original questions about like what's the administration doing? Like, I don't think people know. Reasonable people, I think you and I are like fairly reasonable. We're trying to think about it. Like, we don't really know. Right?
Yeah,
And so
no idea.
That uncertainty is usually bad for price to earnings. Like, if I'm really confident, I pay a high price to earnings because I'm confident in the future growth and the stability of the growth. But if I'm not that confident, I should pay a lower price to earnings for it. And I think this is like case in point right now. And what we offered in our note to investors was like, look, there's some consumer companies now that like everybody loves that trade at really high multiples still. Like, are you sure Chipotle should trade at 37 times earnings? Because if they don't grow, like it's not. So it's not just in tech. It's like across the market. There's a lot of travel data's falling apart. Like there's a lot of stocks that could still go down a decent amount because their valuation, despite the correction, is still pretty high.
Yeah. All right. So this is not investment advice, just for informational purposes. But are you buying or selling at this point?
So what we told our investors is still a little bit too early. That I just need to see how much the numbers are coming down in April earnings, and or any stocks that guide down where the stock does not go down. As a former semiconductor analyst, that was the go signal, baby. Like Intel guides down and stocks flat, stocks unchanged. Then you're like, okay, bad news is fine. Then good news eventually is going to be good. But so far, like think about any company. I mean, Micron a couple weeks ago, it just got like eviscerated on their inventory, right? Like so, I'm focused a lot on inventory and capex. Semis work on inventory to sales. So if the inventory peaks and comes down, I don't think that's going to happen. I mean, look at Micron's like a good example. Like, the stock was over $100 3 weeks ago. It's at 61 now.
Right.
So, so I need a company to miss and understand exactly what the management teams are thinking, and then I need to see the market reaction for me to get in there. Sure, if we get some noon comment that we're now going to take a pause, everything's going to reverse and rip higher. But I still think that the damage will be done on the earnings for the next quarter or two, and I think that's what makes me still a little cautious. If somebody has a longer-term horizon, then yeah, I think you'll be fine.
Okay. Adam, before we head out, I want you to shout out a little bit about what you do and where people can find your work.
Thanks, Alex. Yeah, so for individuals or financial advisors, you should just go to trivectorresearch.com, trivectorresearch.com. We sell several times a month. We write insights, offer ETFs, ETF analysis. So if you like an ETF, we decompose what you're exactly getting, videos, and also a monthly Zooms where people ask me questions. It's $100 a month, $1,200 a year. Just launched that business last month. And then our core business is for institutions called Trivariate Research, which probably people can go to the site and check out. So we're also on X and on LinkedIn and all that stuff.
All the stuff.
Appreciate it.
Well, Adam, great to see you. It's always fun to see you on set, and it's great to have you here on the show. So thanks for coming on.
Soon. All right, thanks a lot.
That would be great.
All right,
everybody, there you have it. The impact of the tariffs and where we're heading next. We'll see you on Wednesday for an interview with Google Cloud CEO Thomas Kurian. All right, that'll do it. We'll see you next time on Big Technology Podcast.